In the last 24 hours, Microsoft has announced that they have been hacked. If you go to their investor relations website, there's actually no mention of it here. So you have to go to the source documents, and this is what companies love to do. They love to save it for after the market closes on a Friday afternoon. People are checking out. They don't want to know about what's going on with companies. They assume you're not going to read it. So here it is. The 8K comes out Friday afternoon where Microsoft discloses a material cybersecurity incident. So as we look into what exactly happened, they're saying, look, Microsoft security team detected a nation state attack on our corporate systems on January 12th. So you're looking at over a week ago since they first discovered it. So a little bit of a delay in terms of letting folks know what actually happened. So they're saying Midnight Blizzard, a Russian state sponsor, actor also known as Nobelium, I believe. So they used a password spray attack to compromise a legacy non-production test tenant. So it sounds like they used a bunch of different passwords on an old system, and they were able to get access to several different Microsoft corporate email accounts, including members of our senior leadership team. They make a point of saying the attack was not the result of a vulnerability in Microsoft products or services, so that's critical, and also saying, look, they didn't get access to customer environments, production systems, source code, or AI systems. So it does sort of show that maybe the damage isn't that significant. I do like asking AI, like, hey, let's bounce some ideas here. What would you think based on this? So I, going to AI Ticker Chat, I go, how bad was this hack? And will it impact the stock? How bad could it have been? And it makes a critical point here, as it's reading through the filing and sort of summarizing it, saying, look, by management calling out that it didn't actually penetrate into the customer environments, the production systems, the source code, or the AI systems, it's this crucial point that suggests that the direct impact on Microsoft's customers and its core business operations may be limited. So, if you're able to access some senior management email addresses, that's not as bad, let's say, as being able to look at the proprietary information that a customer has. And when you don't breach, let's say, the customer trust, it has less of a brand damage, less of a potential impact on the business. So it makes the point that this hack could have been way worse, could have been much worse. And so that definitely makes sense. But it does reflect that there's an ongoing cybersecurity war that's effectively faced by all organizations. And this gets to, a fundamental truth that I think a lot of investors, should be aware of. And I certainly expect you're going to see more of this, in the years ahead. I apologize, the camera broke, and so I'm having that replaced. But the fundamental truth is that there's two different types of companies out there. There's the companies that have been hacked and the companies that don't know yet that they've been hacked. And so that's the truth that we're living in, that this is a tricky environment with, there's always going to be vulnerabilities, and especially now with artificial intelligence, getting smarter. What else is going on with the market this week? Surprised to see that the S&P 500 broke its record, making new highs. This was in part driven by Nvidia stock, which is just one of the investor favorites. You can see how the market cap has gone from a couple $100 billion just a couple of years ago, within the last year or two, to now $1.5 trillion roughly for the market cap for Nvidia. So investors are saying, hey, there's a lot of demand for this AI revolution, for these chips. And this was partly driven by an article with Mark Zuckerberg, who's still running Meta, where he's talking about how his new goal is, so he's saying it's not a pivot, but his goal now is to focus on creating artificial general intelligence. So this is another contender in the AI race. You already have OpenAI, you already have Google trying to compete, and several others. In this article on The Verge, he talked about, Zuckerberg is ready to flex on how Meta will own more than 340,000 of NVIDIA's H100 GPUs, graphic processing units, which is one of the leading chips for building generative AI. So this is a reflection, and I got to give Zuckerberg a lot of credit here, with Meta, which is that this idea that he could pivot from saying, recognizing the metaverse isn't fully there yet, to saying there's something here, and I'm going to reallocate billions of dollars to make sure I have the leading technology. That does get investors excited. So seeing this demand, seeing that he's willing to make these multi-billion-dollar bets on Nvidia's equipment, that gets Nvidia stock going higher. That gets Meta stock going higher, saying, hey, maybe they get some more exciting AI developments going on. And he makes it a call that he is now training. Meta is now training Llama 3, which is an open source model. The goal, though, is that even though Llama 2 wasn't an industry leading model, the goal is that either Llama 3 or future models will eventually be state of the art and eventually lead the industry. Now, this is a little bit concerning for me personally, just because, for a company that arguably has had several slips in the past with, customer data and just, I would say you haven't really proven customer trust in a really prudent way. It is a little concerning to think, oh, well, why not trust you with building potentially a revolutionary AI model? So it is something for investors, to think about. Clearly, at this point, Wall Street likes it. NVIDIA stock likes it, seeing the strong order demand. So where do we go from here? Thinking about the broader market, thinking about investing in general. First, in full disclosure, this is not financial advice. Also, a quick plug: if you're looking for compelling investment ideas, consider Unrivaled Investing, which includes a weekly letter and my personal portfolio updates in real time. We also have an exclusive Discord community where I personally let you in and I discuss your questions, available exclusively for premium annual subscribers. I also have educational materials at unrivaledinvesting.com that you can check out. So a few quick thoughts. I've called this out before in the last few months, which is that with cash yielding now nearly 5%, 4.8% plus at Interactive Brokers, I personally keep my cash at Interactive Brokers, see the link below. It is surprising to see the market making new highs. This is not what I expected. I'm very curious to see if you get some sort of follow through or if this is just a tease to get people interested. And it's doubly weird when you see a few other things, which is, one, you see, investors saying, hey, we're betting on a bunch of rate cuts later this year. So the economy is on the precipice of getting a lot weaker, and hence you should have new market highs. I mean, that just strikes me as bizarre. Now, part of it's this theory that, hey, with lower interest rates, you can get higher valuations. And then, maybe you look through any sort of economic downturn and things just work out. And it's just surprising to me. It doesn't fully make sense. If you have a different perspective, I'd love to hear it in the comments below. I mean, the S&P's, at an all-time high, NASDAQ's around the same level. You look at something like the Russell 2000, though, so you're looking at the smaller 2000 stocks, that is not near high. So you're not looking at a broad-based, leading, like, hey, rah, new bull market. So it is a little bit surprising there, but I think it's important for every investor to consider, like, there's one aspect, which is what's the macro doing? And then the other aspects is, like, hey, what's my own personal portfolio doing? And so every investor needs to figure out their journey themselves, how they want to, manage it. And my view is I'm aware of what's going on with the macro. It strikes me as interesting. It's something I think about, but most of my focus is on trying to find these exceptional companies that I can just partner with and hold for years or even decades into the future. As an example, this past week, I wrote a letter on a company called Brown & Brown. I saved the details for my subscribers at Unrivaled Investing, but this is a dividend aristocrat, meaning they've raised their dividend every year consecutively for more than, I think, 2 decades. This is a company that has increased their sales every single year consecutively, once again, every year for several decades, with the exception of 2009, where sales only declined by 1%. So I'm looking for these high caliber companies that have historically crushed the market, and then asking myself, well, why have they done it? And, can they keep doing it going forward? So my view is every investor needs to figure out, do they want to focus on the macro and a lot of the noise that comes with it, or do you want to focus on the fundamentals? I try to be aware of the macro, and I discuss it here on this channel. Sometimes there is some interesting pricing data that might say, hey, there might be something here with the pricing that you should think about in terms of your fundamental thesis. But, for me personally, I'm just looking for quality companies that I can pay a sensible price and say, hey, I'm just going to hold this for years into the future. And so for more on Brown & Brown and other, looking for those unrivaled investments, check out unrivaledinvesting.com. I hope this video has been helpful for you. Once again, apologize that the camera broke, so I'll be having the upgraded, unrivaled video experience in the future. Thanks so much for tuning in.